We're about 3 past the hour. We will go ahead and get started. So I want to welcome everybody to another weekly Rev Real Estate Live webinar. Thank you all for being here. For those of you that may be your first time, great having you. And for those that have returned, it's good to see you again. I'm Jim Hodges. I'm the Director of Operations for Rev Equity Group. I am filling in as your host today. Dallin had some personal business to take care of, so he's not available. I will do my best. I am not a good host. I'll try as best as I can. I don't have all the same flair and energy that Dallin has, and I definitely don't have the cool mustache. I really thought about putting on a fake one just to start this off, but couldn't find it. So today we're going to talk about why multifamily, some of the pros and cons, right? Each week we come into these webinars with the intent to educate, right? We feel that multifamily is a great investment vehicle. We love it. We're passionate about it. And we want to share that with others. So every week, our goal is to kind of share as much as we can in a short little hour window on different aspects of multifamily investing. So I'm actually going to take a different approach. I don't have a whiteboard, and I'm going to be sharing a presentation if you guys are okay with that. So let me put this up real quick. 1 second. And I'm also working from home today and not in my office, so I'm on a single laptop monitor, which makes things super fun. All right. Can you guys see my screen? Why multifamily presentation?
Can.
Thank you, Paul. All right. So first and foremost, why multifamily? There's a basic human need. We all know these needs fairly well. I think this is Maslow's law of hierarchy. I can't say his name correctly, but starting from the bottom, which is where we're at with housing, is just that physical need of food, water, warmth, rest, right? Basic shelter. We all know that we all need a place to live, a roof over our head. We need that safety and security, and that comes to people differently, right? So we've got everybody who's in, kind of in that rental cycle of their life, whether they're, baby boomers retiring and they're looking to be a little more flexible, or those that didn't plan well, who are actually looking to sell their primary residence that they've owned for 40 years. They've got it paid off to supplement their retirement income. They're looking to move into apartments or multifamily of some sort, or into the rental space in general. And then you got these, new younger generation who are entering the market, and then kind of everybody in between. And that basic human need is there. It's never going to go away. So real estate will always be a great investment vehicle just for that purpose. And if you, from an investment standpoint, I love this chart. It shows, from an investor's point of view, real estate over the years has increased as a basically the top vehicle for long-term investments. So if you look, we're at 45%. Stocks are, they go up, they go down. Real estate goes up and goes down too, right? It's got a market, but people are becoming more and more aware of the power of real estate, what it can do, how it can be a long-term wealth generator, how it can, supplement your portfolio, all of the different, tax incentives and benefits of real estate, some of which we're going to get into a little bit more in this webinar. I love Robert Kiyosaki's phrase, and I'll quote him here: savers or losers. We all know that today with the high inflation rates that we're dealing with, your money sitting in the bank is losing 2 to 3% every year as it sits there. So putting our money to work, increasing our investment portfolios and focusing on a stable asset such as multifamily real estate is an awesome option and a great vehicle, and is why we love it. Here's a really cool statistic. We all know, I think everybody on here was around in the 2008, 2009 recession period. I know my personal residence at the time literally went upside down. I had a very conservative approach. I'm a very conservative guy. And, while all my neighbors were refinancing their house from, 2004 up to 2008 and pulling money out and buying boats and buying RVs and buying, ATVs and UTVs and all the fun toys out there and taking every bit of equity they have to do that, I was conservative. I refinanced my house once during that period just to actually get out of a mortgage insurance and all of that fun stuff, but I didn't take any equity out of it. Even through that time period, and my house value almost doubled in 2008. It was just shy of a complete double. Once that market hit, that dump hit, I guess, I lost, what was it, 60% of my home value, just kind of based on neighborhood and stuff like that. So I went upside down. It was an awful time. That locked me in my house for an additional 5 years or 6 years, excuse me, and prevented me from moving, even though I wanted out of that neighborhood pretty bad. So looking at this chart, you guys will see multifamily versus industrial. So, your commercial space, office space, retail space. During that recession, the decline in multifamily, it got hit, but it was only 7.9%, right? Where your office space, your industrial space took a much, much larger hit. And as we know, as I just shared, right, we all know residential took a huge hit. Our single family residential took a huge hit. But what I really like is how fast it returned, right? Multifamily came back with a vengeance. We've all been, if you've been in the space for a little while, we've watched this hockey stick of growth, especially over the last couple of years. And one of the main reasons why we love real estate is because of its recession resilience. It doesn't mean you're not going to be impacted during a recession, but you're not going to have the same level of impact that you would in other spaces, such as single family, industrial, retail, things like that. Stocks versus bonds. There's always a lot of talk about stock market, what's going on with the stock market, the 10-year bonds, everything else like that. This chart shows, and it's only going up to 2013, but over that time period, the down years or the negative return versus the up years, if you guys see, real estate has just been, phenomenal as far as maintaining your wealth. So every dollar spent in versus stocks and bonds is retained better and longer. And, it doesn't mean not to, diversify your portfolio and making sure your investments are spread out across multiple assets. But from an overall, yield and year over year, protecting my wealth, real estate is a great vehicle. In my opinion, again, and none of this, by the way, let me put my legal disclaimer in there. None of this presentation is financial advice in any way. Please seek counsel if in planning investing in real estate or any other stock, bonds, or mutual funds. The other thing we love about multifamily, right? We went over this, or Dallin shared this in one of our weekly webinars a couple of weeks ago. There's multiple ways to earn here. Cash flow or sell proceeds, forced appreciation in the market, principal pay down, and taking advantage of depreciation. Now, I can go into, and I could say this for the end, I won't go into all the depths or details of this. This was covered in a previous webinar, guys, please go to our YouTube channel. We put all of our videos up, that we record all these sessions. We put them all up on YouTube for you guys to check out. So please go there, subscribe to our channel, and watch these at any time. And as always, we'd love for you guys to share and spread the word for us. We love being able to educate folks. So I want to get a little bit more into the details. Now we got past some of those high level slides about the market and difference between stocks and bonds. And you guys, please feel free at any time to reach out. We got members of the Rev team on here. Like I said before, I'm on a single screen right now, so I'm not going to see a lot of the comments, but if you've got questions, throw them into the chat. We'll bring them up, and I can stop at any time and we can talk about things. And in fact, I'd love to have this. I don't have a ton of content to go over, so I'd love the back half of this webinar to be, conversational Q&A, really kind of answering any questions you guys have, or talking about things that you guys want to talk about in more detail. So pros and cons. One of the things we think, if you look just single family versus multifamily, right? The first thing about multifamily that is an absolute pro is its scalability. In the single family space, you have a single asset, single tenant. And, let's say if you have a portfolio of 5 to 10 single families spread out over, one MSA, right? Let's just say Phoenix, because that's where I'm from. So if you have 5 to 10 single family residents, with tenants and maintenance, and, even if they're in a 20-mile radius of each other, you have to deal with individual tenants and vacancy. So as soon as that single family property is vacant, that's 100% on you, the owner. Where in a multifamily, right, you're 10 unit, 20 unit, 100 unit, 300 unit, you have much more tolerance for vacancy. You can, depending on the numbers and where you're at, you can survive without any impact to the business and the cash flow with, a percent vacancy. So you could have, 10% vacancy in a 100 unit complex and keep right on trucking. Well, in a single family, as we all know, when the tenant moves out, you're 100% vacant and those bills are on you. So scalability from that perspective, maintenance, and if you think about, again, we have 10 single family units. I have a water heater breakdown, and I've got to go out to that single house. I got to replace that water heater or air conditioner or roof or whatever it is that is causing the problem. And then I got to go across town to do another one, and back across town to do another again. Where in multifamily, the beauty of it is, you've got, I like to say single roof. We all know in 100+ unit complexes, it's multiple buildings, but it's one spot. It's all in one location. So you consolidate all of your maintenance, you consolidate all of your problems into a single location, where if it's large enough and it makes business sense, you can have an on-site maintenance person, you can have, on-site property management, and all of that is self-contained, and it drives efficiency in your business. Where again, in single family, you're bouncing all over the place. And the biggest pro, again, and to talk a little more details, the forced appreciation. There is, again, a webinar. We went into great detail about forced appreciation, but just from a high level, forced appreciation is being able to control your income and expenses, right? We can raise rents, we can add RUBS, we can add other offerings like, in-unit laundry rental, where you're supplying the washer and dryer and you're charging the tenant for that. Trash pickup, the door service trash pickup, smart home type, electronic locks, paying for internet and things like that, where you can drive your income while at the same time trying to reduce your expenses and improving your NOI, or your net operating income. So we have control over that in the multifamily space as multifamily operators. And where in the single family space, it's all market driven, right? So whatever my neighbor sold for and their neighbor and whatever the neighborhood looks like, that's the value of my home, no matter what I do to it. I could have, you know, the best appliances, upgraded kitchens, brand new flooring, all the bells and whistles in a house that you would want. And my neighbor right next door is letting their house, you know, fall apart. They haven't painted it in 100 years. The grass and the weeds are growing. Well, guess what? They sell their house. They now set a market trend and it impacted yours. Whether in multifamily, I can control expenses, net operating income. Now I can't still, there's a market factor there. I can't control the market. It's still supply and demand based, but that's only a portion of the value of my property. So that's forced appreciation at a very high level. Now, some of the cons, and these are big, folks. When you compare single family to multifamily, now if you're a single family guy and you've got a few rentals and you're kind of managing all of that yourself, you know, it's still important to have a team. You need someone you can call for major construction or handyman services. You should probably still have an attorney. You should probably still have a CPA of some sort, even in the single family space. But in the multifamily space, you are running a full-time business. And for some people, that's a major con, right? Let's say you have a job that you love and you're making a good living, and it's a, you know, multifamily is not necessarily just a side hustle. If you want to be a multifamily operator, it is a full-time business. You have to have a solid team. You have to have ongoing daily attention, and it doesn't stop, right? It's 24 hours a day, 7 days a week, because tenants are living in your apartments. There's also a higher turnover when compared to single family. So typically when a tenant moves into a single family residence, they feel more at home and they're less likely to move as quickly. Now they can move, but typically what we see in the multifamily space is a tenant will come in, they'll live for a year, and they may move. And that's part of the flexibility that tenants who live in apartment complexes love to take advantage of. Maybe the guy down the street's got a better deal, or maybe they switch jobs and they need to move across town so that they're closer to work. So there is higher turnover, but the beauty of just the higher turnover in a multifamily complex is you have systems in place because you're running a business, and you can turn those units faster and you can do multiple units at the same time, where versus
Jim, I have a question.
Yes, sir.
Yeah, you know, I actually have single family homes and a few multi-family properties that I'm managing right now. As today's market, what financing options are available for multi-family real estate investment? And how do you determine which one is the best fit for your investment strategy? What you think, in your opinion?
So, as you may know, the financing has changed in the market today, right? Where 6 months, 8 months, a year ago, you're taking advantage of, you know, banks just happily loaning money to anybody and offering 80 to 85% leverage on a loan. You're not going to find that today, right? You're going to have to raise more capital to get into these larger assets. If we're talking multifamily, you're going to get probably closer to 60% leverage. So that's, you know, if you're going to raise, basically you're going to have to raise the 40%, whatever the price of that property is, the purchase price of that property is, you're going to have to raise or come up with 40% of that. And with higher interest rates, so you'll still see your similar terms to what we saw a couple of years ago. That they're not quite the same. Banks are requiring more capital reserves. They're more conservancy, more I guess more experience and before they'll lend their, before they'll lend against your asset. You're also seeing where a lot of, I guess, a lot of banks they're allowing for rate locks, but they're still allowing interest only. So a couple of deals we got into in Houston, we were able to buy in a rate lock, a 3-year rate lock with 2-year extension ability, right? So we can extend that rate lock for an additional 2 years, which you almost have to do because as we all seen, right, the Fed's getting kind of wacky with interest rates right now. So that's kind of does that answer your question, William? That's kind of where we're seeing a lot of the lending going. They're not lending on as much, so you're not getting as much leverage from the bank. You're having to buy down your rates if you want a lower rate, or you'll have to lock in your rate. They do still offer interest only. There are still bridge loans and things out there like that. But you're going to have to shop lenders a whole lot more than you used to. Does that answer?
Yes, I'm seeing that too. Yeah, exactly.
Yeah. Okay. Any other questions while we on a little pause? Okay. Some of the other cons for multifamily that we find, right, it's a higher barrier to entry. So for those who are just starting out wanting to get into multifamily, is absolutely a higher barrier of entry. And it really comes down to capital, to experience. It comes down to having, a strong team, solid business plans, and great systems. It's absolutely mandatory that you have great systems. The single family space is a little more forgiving, and you can really, I think you can get away with having a little less knowledge and experience. You still need to have it, right? Don't discount what I'm saying. You still need to know what you're doing in the single family space as well, but in the multifamily space, mistakes are much more costly, and you really need to know what you're doing and how you're doing it. And the other big thing in the multifamily space that I see as a con is just tougher competition, right? You're going up against one, it's less inventory that everybody's going after. So in single family space, there's, you're competing against the residential buyer or the normal consumer. In the multifamily space, you're going up against, sometimes big players who have tons of capital in their back pocket ready to deploy. And so the competition can be pretty fierce. The one thing here at Rev, and then I'll get into, after this little thing, I'll get into kind of some of our experiences and some of the cons and the pros that we ran into being in the multifamily space. But I want to share with you guys, for those of you that haven't heard this before, where we're at, what Rev is doing. And, as we talked about, the whole point of investing in multifamily, right, is we want to be able to grow and preserve our wealth. I think that's why we're all here, right? We want an investment vehicle that will help us to grow our wealth and in a solid asset that isn't as, I hate to use the word risky, but it's more recession resilient, as we talked about before, right? So our goal at Rev is to build this community, work with investors, and to help them grow and preserve wealth, right? We want to give back. We love to be able to serve, and that's why we have these webinars and our education piece. And we want people to be able to have their time back. And on the other side of that coin, right, in order to get into multifamily, excuse me. hang that up. Should have turned that off. The other side of multifamily, right, is all about managing the asset. You have to have, in order to acquire assets, right? Like I said before, this is running a business. We're entrepreneurs, and for some, entrepreneurship is super exciting, and others, it's really just, hey, I would like to put my money to work and grow it. So if you're wanting to get into the multifamily space as an operator, these are some of the things that you need, right? You've got to have broker relations. You got to be able to source deals. You have to have skilled experience in underwriting, right? You need to understand the financing side of things, like William was asking about, right? You've got to know what's going on in the market today. You've got to know what's going on with lenders and what kind of financing you get, because all that plays into your underwriting model anyway. Then you have to have asset management, whether you're doing that on your own, and typically in a multifamily space and larger multifamily spaces, units, you've got to have that, usually third party. So asset management, meaning, property management, construction management, leasing and tenant management, all of those things have to be accounted for, and they take time and experience to learn. So we at Rev, we like to build the bridge, right? We are considered as, hold on, the bridge. This is Dallon's little slide he's so proud of. We're the bridge between those who want to invest, right? They want to grow their wealth. They want to be able to give back and get their time back, and be able to focus on the things in life that's important to them, and not necessarily build this multifamily business or empire in order to gain it. So what we do is we vet the operators, we vet the deals, we vet the markets, right? And there's, again, on our YouTube channel, all kinds of education on doing those things for those that are interested. We love to educate, as we're doing here today, and we also love to give back. We love to be able to give to charity and give back to the communities that we're involved in. And so we're kind of that conduit, or that bridge between those who want to be more passive investors versus those that want to be operators. Now, we play in both spaces. We're passive investors and operators, and we understand both sides of the fence. And if you're an operator and you're on this call with us today, we want to connect with you. If you're a passive investor and you're on this call, we want to connect with you as well. And this is why I'm showing this slide for you guys, right? So one other thing I want to show before we kind of get more into some of Rev's experiences and pros and cons in the multifamily space, I want to introduce our team, because I don't know if everybody knows everybody on our team. So I want to take a minute here. Starting on the left in this picture you have on the screen, that's Paul Karchner. He is on this call today. Some of you may know him already. He is our projects and systems manager. He is such an instrumental asset on the team about putting all of our systems together, our workflows, our processes, making sure everything flows together. These webinars come together, all of that stuff as well. Next to Paul is Lacey. She's our director of marketing. Anything that you see in your email or any of the social media feeds, that's Lacey. You guys all know Dallon, I'm sure, the mustache man himself. And again, I'm Jim Hodges. I'm there on the right. And these are kind of some of the core values we have at Rev, or our core values, not some of, but our actual core values that our company is based off of, and our uniques. So I wanted to take a minute and just kind of share that with you. I don't know if we've done that or not in the past, but I thought it was important that you guys kind of knew the team. Also on the call today is Hillary. I don't want to forget Hillary. She is our administrative assistant, and she keeps the wheels on for everything. She's involved in pretty much everything that we do, and she keeps us organized and on task, and she is a phenomenal addition to our team. And so on that note, I'd like to, let me just get out of this. I'll stop sharing my screen, get back to you guys. So I want to talk a little bit, and this is where I want to get really kind of interactive, folks. So please let's chime in. I would love to talk about your guys' experience as much as ours. I'll start with kind of ours, but I'd love to know what you guys have got going on as well. So in the Rev experience, I guess we'll call it. So Rev, or my own personal experience as well, but being with Rev, some of the pros, right, on running and managing a multifamily operation has been gaining a better appreciation of entrepreneurship. It's been phenomenal trying to build a business. It's been stressful to try and build a business and make it operate and make sure we're doing the right things, and we're doing it in a way that is sustainable and scalable. It's also, from a multifamily investment, right? It's always great to make money. I mean, I'm just going to call it like it is. I'm a pretty transparent guy. It's great to be able to make money in real estate, and we've had some pretty good success in doing just that in the multifamily space. But I want to talk about some of our fun little cons, just to get real for a moment. So one of our assets last year, it was a smaller asset. It was an 8-unit apartment complex with a development deal. Some of you guys may know this story already, but I'm going to share it with those that may not have heard it. So we looked at, or we found an opportunity. It was an 8-unit apartment complex that we were going with, along with an acre adjacent to it. And we were going to develop an additional 30-unit, 3-story, 30-unit complex. So we took that asset, we started renovating the 8 units, and we started working with the city and working with, different developers and engineers, and trying to get all of that put together. Development it's a beast. I don't know if any of you guys have tried your hand at it. It is definitely a beast. There's a lot of moving parts there, and it's a slow process, but a great learning experience. But from just focusing on multifamily investing side of it, and not the development side of it, we decided, because it was such a small apartment complex, that we were going to self-manage, right? I became the property manager. I also ran all of our rehab guys, handymen and construction guys. I did all the tenant leasing, and it was kind of firsthand experience of that. What people say, that 3 o'clock in the morning phone call of the toilet is overflowing. I definitely experienced that. I'll share a quick story. We had a tenant who called me one afternoon. It was actually early evening probably, and said, my entire apartment is flooded. And I'm it's flooded. What do you mean it's flooded? And she's like, everything's wet. And she's in this panic, right? Everything's wet, everything's flooded, everything's ruined in my whole apartment, everything's ruined. And I'm trying to understand what's going on. I said, well, is there water flowing from somewhere? And she's like, no, the walls are crying, quote unquote. The walls are crying. I'm like, what do you mean the walls are crying? She's like, there's water. It's seeping out of all the cracks in the walls. And I'm like, well, you don't have cracks in your walls. She's like, no, there's cracks everywhere in the walls. And she was talking about the texture, right, of the drywall texture. She said, there's water coming out everywhere. So after a little more digging, a lot more conversation, I called our construction guy and I said, will you please talk to this tenant? Because I have no idea what she's talking about. Turns out, there was rain the night before. She wasn't running her air conditioner. She had her windows open, and there was just an excess of condensation built up inside of her apartment. These are the kinds of things, that you've, weird as they may be, you got to deal with when managing properties, whether they're single family or multifamily, right? And why, when you're starting a business in investing, you've got to really work on all of those. Well, what do I want to do? What do I want to take on? do I want to self-manage? Do I want to hire a property management company? Because even in hiring a property management company, you can't just let them do their thing, right? You've got to stay on top of property management companies. There are good ones out there, but as some of you may know and have experience in, there are definitely bad ones out there that do not have your best interest at heart. That same tenant, another quick story, called me. Literally, it was 3 o'clock in the morning. My toilet is overflowing phone call. It took 45 minutes just to get her to stop talking about her overflowing toilet. Then at the very end, she's like, oh, the water's gone down. And I said, okay. You know, the whole time I'm asking, do you have a plunger? Do you have a plunger? Can you turn the water valve off? And she just panicky again. Oh, I can't, I don't, everything's flooded. I'm using all my towels. Everything's getting wet, and just panic. And these, again, you know, when you're dealing in apartment complexes, you're dealing with a different tenant type, right? They may not have handyman experience. They may not have ever had to plunge a toilet before. So you're getting that phone call. And I share these little examples, right? Just they're lighthearted, they're fun, nobody loves getting woke up at 3 o'clock in the morning and saying my toilet's overflowing. But these are things that when investing and being on the operator side of things and wanting to run and manage a business, you've got to think about, right? You have to think about, how am I going to manage tenants? How am I going to manage all of the accounting? I definitely suggest that you don't do your own books unless you've got, you know, a background in accounting, because it's complicated, and especially if you've got investors involved. We, right, as sponsors or operators or fund managers, we have a fiduciary responsibility. We have to know what we're doing when it comes to accounting. So we need the teams, we need the experienced people on our teams to be able to run these businesses. So I know there's a lot of people out there, right? Social media, you see it all the time. Everybody talks about, ooh, real estate, it's so easy, you'll make money. And it can be. It can also be very complicated. But I think where a lot of people are at today is they want to hedge inflation. They want to secure their future. They want to be able to, you know, grow their wealth, as I said before. They don't necessarily want to be a full-time operator in a multifamily business. And so I always tell people, what do you want to do? One, what is your risk tolerance? What are you looking to do, and why are you looking to do that? Because multifamily real estate, or real estate investing in general, is not the get rich quick scheme some people promote it to be. It is a long play, and time and dedication and growth vehicle. But again, time is of the essence there. In fact, I heard the other day, Warren Buffett, 95 years old, still saying the same thing that he's always said in his entirety of his investing life or career: buy into a good deal, whether he's talking about stock investments or real estate, because he does both. Buy into a good deal that is going to, you know, grow over the next 20 years. And at 95, he said the same thing: find a good investment, put your money into it, and then sit on it for 20 years, because that's how life and how real wealth is created. So folks, I've talked way longer than I thought I was going to talk. Apologize for that. I would love to, you know, turn some time over to you guys. I'd love to hear from some of you that are in the space already, and some of the experiences that you have had, and, you know, some of the pros and cons that you've seen in the multifamily space. William, what about you, man? You said you're doing some multifamily and single family, which I'm sure they're both working out for you, but which do you prefer nowadays?
Well, I'm trying to get, as you know, I'm trying to get into commercial multifamily, trying to get out of that space of single family, managing it by myself, So I just joined up with GOB Network. It's just a like-minded real estate meetup that we have, kind of try to educate on the right properties, So we're looking at deals right now, and for me, I'm actually even talking to mom and pops. That's why I wanted to kind of figure out what kind of loans available out there today, because there's so much going on, and the banks are trying to be safe. So we just, hoping and pushing and seeing what's really going on out there. So we're trying to get into multifamily real estate right now. So that's
So
what
can
I'm
I
doing.
ask the question of you've been in the single family space, what's driving you to multifamily?
It's a lot of work. Single family properties is a lot of work. For the past 2.5 years, I have a property manager that I fired. So since then, I've been doing it by myself, and it's a lot of work. I love tenant. I like dealing with tenant, but it gets overwhelmed.
Sure.
As you know, I get overwhelmed, and for me getting older and all of that, I need some time for the family. Ripping and running back and forth different properties is kind of not scalable. So that's why I'm switching over to real estate, commercial multifamily right now. So we're looking at larger units, anywhere from 15, 20, 50, 100. Because right now I'm looking at 176 unit right now, between Southern and Dapson, hoping that we can able to underwrite it. It's mom and pops, run by mom and pops. They do their own property management, and they kind of lost a little bit. We're waiting for the rent roll right now. So that's kind of the direction I'm looking right now.
Nice. So there was something you said in there that kind of goes along with the theme of today's webinar, and you're talking about wanting be able to get your time back, because there's a lot of running around to these different single family units, right? And again, folks, putting all of your problems under one roof or on one property drives efficiency in your business. It really does, right? Having everything contained and being able to send a maintenance guy to one location, have him wipe out 15 different tickets, service tickets, all in a day or two, or however long as it takes. But rather than wasting time of driving all over the valley, it's such a wonderful efficiency to take advantage of in the multifamily space. And we here again at Rev, right, we're all about efficiency. We want to be as efficient as possible in everything that we do. So William, thank you for that. I appreciate you sharing and where you're going, and I think that's awesome. I will say, oh, go ahead.
Yeah, and I also have a question, and anybody can answer it, because I always try to max out when it come on to question, because that's the only way you can get the answers to all questions. What are the most important factors to consider when evaluating a potential investment in multifamily real estate? What do you think?
So I can answer. Does anybody want to jump in on that before I give my 2 cents? No volunteers. All right. So it really depends on, and William, what I don't know if you were on our last weekly webinar where we talked about, operator market deal, right? Now you're wanting to be the operator, so you don't have to self-eval as much. So then market is your next evaluation point. You want to make sure that you really understand the market you're going into. You're talking about, I think you said Dobson and Southern area for this 176 unit
Yes.
deal. Yeah. So now we know that, you're kind of Mesa Tempe border, right? Mesa Tempe border, Chandler too, I guess Gilbert, Chandler, all that's that Dobson and Southern area for those of us in Phoenix is really kind of the sweet spot between those areas. But you really, for you personally, we know there's growth in Phoenix, Phoenix Metro. We know there's high demand. We know all of those good nuggets for the actual market, but for that particular type of deal, I would be digging into what does that property location specific, right, look like, and what is the 5-mile radius around it? What's the crime rate? What kind of tenants are in that area, right? What class of an apartment complex is that? And what's, what type of a tenant's going to be attracted to living there? Because if you're dealing with an area where, what's the best way to say this, where you're dealing with I don't want to say lower class, but it's the only way I can phrase it at the moment, tenant who may not care as much about your property, and you're going to deal with a lot more problems, right? So what kind of tenants are attracted to that particular market and why? If you were buying a place in North Scottsdale versus a place in downtown Phoenix, you get what I'm saying. There's two different types of people living in these apartments. So I would look at first market for sure and understand all the way down to that little area, what's going on with there. And then you start digging into the deal. So what kind of, well, you said you're waiting on the rent rolls and things like that. So what kind of efficiencies can you drive in this deal, right? If it's been run by a mom and pop and they're ready to retire, you could probably be pretty sure that there's some efficiencies that you can drive, right, to increase NOI. But they may be good operators, right? So you got to look at deferred maintenance. You've got to look at how are they running the business? Is there anything that I can implement to increase NOI, right? Is there low flow fixtures that I can put in? What kind of capital expenditures am I going to have up front? There's all of this is going to go into your underwriting, right? But you really have to understand that asset based on the numbers that you are presented and then the creativity you have as an operator. And what you can do to drive efficiency, what you can do to drive income and reduce expenses. That's, in a nutshell, that's really what it is, what it comes down to. Does that answer your question?
Yes. Yes.
Perfect.
Did good, Jim.
Yes.
I never thought you were that good, man.
No,
You surprised me.
Well, thanks. I appreciate that. Maybe I surprised myself a little.
Exactly.
Yeah, no, I appreciate that. Does anybody have any other thoughts or questions?
I have one quick question, Jim.
Yes, sir.
What kind of percentage do you think it is saving you from either managing the properties yourself and or hiring it out? Do you think there's a big percentage savings by doing it yourself, or is it better off to try to hire that out?
Well, so it's an odd math factor, right? Because depends on scale, first of all. So if you're talking something that's, let's say residential multifamily or smaller commercial, right, 10 units or less, the biggest mathematical factor in there is time. Now, when you start getting above that, you're dealing with more problems, and you're better off really to bring outside services no matter what. But in that 10 unit or less, on a typical apartment or asset management company, property management company, right, they're going to charge you probably 10%. So 10% of rent per unit. And then when that's, as you scale, that number comes down, right? So as you're in 100 units, maybe it's 8, or you can negotiate 7.65%. So it kind of depends. It's hard to judge, but I always look at it when it's in the smaller space. It's about time. What is my value? What do I put on time, right? Am I a $50 an hour guy for myself, or am I a $500 an hour guy, right? I like to consider myself a $500 an hour guy. And if I can pay even anywhere below $500 an hour for somebody to take a phone call about a toilet at 3 o'clock in the morning, you bet I'm going to pay them, right? Does that make sense? I did the property management thing on that little 8 unit, 1, to drive efficiency. It was more of a flip project than anything else. And 2, to get the experience of dealing with tenants and the property management side of it, making sure I really knew the laws. That's what I really wanted to go after, right? Is I want to understand tenant law. I want to know, and it happened to be during the pandemic, which added a whole nother, complexity of what was going on at the time. So that's why I did it. But this is, again, my personal opinion, I'll never do it again. I would rather pay somebody. I can do so many more things so much better and drive our business forward than to deal with property management, right? And there's people out there, they're really good at it. They're efficient. They've got great systems. They've spent years building all those systems. They know the laws. They know what they need to do. And then all I need to do is manage them, right? And stay on top of it. So I think even going forward, if I was to buy personally a small, 5 or 8 or 10 unit apartment complex, I'm still hiring property management. I would just work it into my numbers, and make it fit. That's what I would do. Good question. All right.
Thank you very much.
Sure. Anything else? We got a couple minutes left if anybody else has a question. Okay. Folks, last comment I have, we love connecting with people. We love networking. We always, we've always got things going on. We'd love to hear from you. We have our investor portal. I'll have Hillary throw it up in the chat right now. If you guys are interested in connecting with us, see what kind of deals we're getting into, see what we got going on, register for our investor portal, and we'll have somebody reach out to you if you wanted to passively jump into a deal that we've got going on, or what we've got coming up here in the near future. We have to have that relationship, right? I spend a lot of my time in the Rev team. My part of my role is legal and compliance, right? I spend a lot of time with our attorneys. I spend a lot of time understanding SEC regulations and how all that stuff's supposed to work. I kind of like it. It's weird. I don't know why. Maybe I should have been an attorney in my former life. But if you guys, we have to have pre-existing relationships if you guys want to come into deals with us. So if Hillary, if you'll throw that into the chat, I would greatly appreciate it. It's basically rev.invportal.com for those who have a great memory. But we'd love to have you in our portal. Anybody in the portal gets first access to deals 24, sometimes 40 hours before anybody else is alerted to them, because we love to take care of our investors. And on that, folks, thank you so much for joining us today. Thank you for your patience and me fumbling through our weekly webinar, and some of the kind words you guys have sent. So I appreciate that. And we will talk to you next week. Enjoy.